Hi guys, this is Liz Brown with Accounting 2301 Financial Accounting with Richland College. Let's do another example from Chapter 3. We have an adjusted trial balance here for Boilermaker as of December 31st. We are going to take this information and we are going to create financial statements based on what we've been given. So let's take a quick look at the data that we have before we start updating these statements. So we can see that it's laid out as debits and credits, so this will line up with dealer. So we have our assets here, cash, accounts receivable, supplies, prepaid, equipment, and accumulated depreciation. Now those are going to go together. We have an asset and a contra asset. We have liabilities, accounts payable, salaries payables, utility payables, and we have a notes payable due in 5 years. So we look at these and we break them into current and long term. Current is going to be due in less than a year and long-term in more than a year. So we know this is going to be long-term as it's due in 5 years. Common stock and retained earnings. What we're noting here is that retained earnings, this is last year's balance. There has been no entry made for retained earnings yet because this is our adjusted trial balance, not our closing or post-closing trial balance. Okay? We have some dividends here, $26,000. We have revenue, two types, new construction and remodeling. And then we have some expenses here. So I'm not going to read all of these expenses, but we will go through these as we do this problem. We see that in this adjusted trial balance, the point of this is to note that the debits meet the credits or match the credits. So we have those lined up here, so that's great. And some additional information. We had common stock issued during the year of $30,000. Now that is included in our common stock line here of $200,000. That's just some additional information that'll come in handy with our statement of stockholders' equity. So let's pop over here to the next screen and see what we've got. So we're going to start now. There is an order to the financial statements as we learned in the book and in Chapter 1. We're going to start with the income statement. That will give us net income. That will then, in turn, help us to calculate our balance of our total stockholders' equity. And then we will use this information to do our balance sheet. So let's get started here. I'm going to reference these numbers here in revenue, $450,000 and $280,000. And then we'll move through these expenses here. First things first. We note that we have a title here. So we have the title of the company, which statement we're doing, and the year that we're doing this for. Note that we have a period here. We are talking about the income for the entire year, January 1st through December 31st. Okay, so service revenue, we had new construction of $450,000. We have our remodeling revenue of $280,000. And we can do a quick sum here to give us a total of $730,000. Now we're going to come take a look at these expenses. All right, so I'm going to come over here, and I'm starting with salaries expense of $160,000 and moving through service fees expense of $73,000. So let's come over here. Salaries are going to be $160,000. We have supplies of $285,000. We have depreciation of $50,000. We have insurance of $25,000. Utilities expense of $42,000. Interest expense of $9,000. And service fees of $73,000. We have total expense here. We can do a sum. And it's $644,000. I have set up a formula here, which is the total revenues less the total expenses. So $730,000 less $64,000 is going to be $86,000. That is our net income. All right, we're going to move down here into the statement of stockholders' equity. Again, the title here, we've got the name of the company, the statement. Again, we have a period. We are looking at, as we can see here, the balance in January through the balance of December 31st. So we don't want to put just a date. We need to say for the year ended or for the period ended December 31st, 2018. All right, so what we need is some balances as of January 31st to start us out with, and to finish our balances of December 31st. This one's a little tricky. What we've got here on our adjusted trial balance is we are seeing that we have common stock here ending at 200,000. So that is where we are on December 31st, ending with 200,000. And we've got additional information that we issued 30,000 this year. So let's come over here, and we know usually, we start with the January balance, but in this case, we've got the adjusted trial balance, so we know our ending balance is 200,000. And we know that we had issuances of 30,000. So we need to back into our beginning balance. So what we're going to have here is 170,000 as our beginning balance on January 1st. So we started with 170,000. We issued 30,000 for a total of 200,000. So we did have to do a little bit of working back to solve for that January 1st balance. Okay, let's move into our retained earnings. What we know here from our adjusted trial balance is that we have retained earnings of 31,000. That is what we started with as our beginning balance. We will calculate our final retained earnings balance here, but we have not yet booked our closing entries. We have not closed out the 3 temporary types of accounts into retained earnings. Those would be our revenues, expenses, and dividends. All right? So no change on the adjusted trial balance until we do those closing entries to that retained earnings number. Okay, so issuance of stock. That doesn't go in this line. We already took care of that. So we're going to skip down to net income. Net income is 86,000, so we'll add that in. And our dividends. Let's check this. We have dividends of 26,000. All right, so we'll add those in. Let's go ahead and make those negative. All right, so a way to show negative in accounting is with the parentheses around those. So we have a total retained earnings. Our calculation is 91,000. The T account has not been updated. The journal entry has not been booked. Right? We've just done a calculation here. I went ahead and added the formulas into Excel here to calculate these balances. This is just these 2 numbers across and so forth. And then this is a sum of this column and of these rows across. Great. Let's move on to our balance sheet. All right, let's look at the title. Company name, balance sheet. This one is different. This is a day only, so I want to be sure to point this out. This is not a period of time. This is not what our cash balance has done and changed from January 1st to December 31st. We look at that on the cash flow statement, right? What we want to know is, what's the balance today? Same thing with accounts receivable. What is the balance on December 31st? All right, so this is a date and time on this balance sheet. So be sure to put that in your titles. Okay, let's go take a look. Cash, accounts receivable, supplies, and prepaid. These are all assets that we plan to use in the next 12 months. We have our equipment and accumulated depreciation separated, as those are going to be long-term assets. We plan to use our equipment for longer than 12 months. So let's look at our balances here. We have cash of 16,000, accounts receivable of 25,000, supplies of 32,000, prepaid insurance of 7,000, equipment of 625,000, and it is related to, or these go together, a contra account of 200,000 related to that equipment. So let's update this over here in our balance sheet. Now what's very important too is we're going to check this at the end, is that our assets equal liabilities plus stockholders' equity, right? So let's go ahead and update this. Cash of 16,000, accounts receivable of 25,000, supplies of 32,000, and prepaid insurance of 7,000. I've added a formula here to give us our total current assets of 80,000. We have $625,000 of equipment, and its related accumulated depreciation of 200,000. These numbers added together, the 80,000 plus the 425,000 here of our net book value for equipment is 505,000. Let's move into our liabilities. We're showing the liabilities that we plan to pay in the next 12 months, right? Accounts payable, salaries payable, and utilities payable. I guarantee you our employees will stop working for us if we don't pay them in the next 12 months. And our lights will no longer come on if we don't pay our utility bill in the next 12 months. These are our current liabilities. Now our notes payable with the bank, those can be longer. So we will give you, if the information is needed, we will tell you how long those notes are available with the bank. In this case, it is longer than a year. So let's look at our balances here. All right, so there's that note payable due in 5 years. We have accounts payable of 31,000, salaries payable of 28,000, utilities payable of 5,000, and notes payable of 150,000. So let's go ahead and update these numbers. So 31,000 for AP. Now I just abbreviated accounts payable as AP. That is a common abbreviation in the business world. Salaries payable 28,000, utilities payable 5,000. That's going to give us total current liabilities. I'm going to add a formula here. I didn't do that beforehand. Give us current liabilities of 64,000, and I'm going to add that note payable of 150,000. All right. So we have total liabilities of 214,000. Statement of stockholders' equity up here is going to provide these numbers for us. The common stock balance is 200,000. That was also on the adjusted trial balance, but we're going to go ahead and add it from here. We know that our retained earnings will be 91,000. Note, the retained earnings balance has not changed here. We have not booked a journal entry yet. And our total stockholders' equity, these two numbers added together, 291,000. And yes, we are lucky. We have assets equal to liabilities plus stockholders' equities. We are balanced here. Please let me know if you have any questions about these statements on the discussion board. I hope this example was helpful. Thanks.